Hello and welcome to this video on ROC compliance for private limited companies in India. In this video, we will discuss 15 important aspects of ROC compliance that every private limited company needs to keep in mind. So, let's get started. Auditor appointment and filing of ADT-01. The first aspect is auditor appointment and filing of ADT-01. Every private limited company needs to appoint an auditor within 30 days of incorporation, and file Form ADT-01 with the Registrar of Companies within 15 days of appointment. Filing of ROC annual returns, AOC-04 and MGT-07. Next, companies need to prepare and file their ROC annual returns, including AOC-04 for financial statements, and MGT-07 for shareholder and director information, within 60 days of their annual general meeting. Opening of company current bank account. It is mandatory for companies to maintain a zero-balance current account with their banks. This is to ensure that all transactions are recorded and there is no possibility of any undisclosed or unaccounted transactions. Filing of balance sheet, P&L accounts. Companies also need to prepare and file their balance sheet and profit and loss accounts, along with any other relevant financial statements, with the ROC within 30 days of their annual general meeting. Filing of audit reports and directors' reports. Companies need to prepare and file their audit reports and directors' reports along with their financial statements. These reports provide an overview of the company's financial health and performance over the year. Filing of extract of annual returns and financial statements. Companies also need to prepare and file extracts of their annual returns and financial statements with the ROC. These documents provide a summary of the company's financial performance and compliance. Filing of minutes of board meetings and AGM. Companies need to maintain minutes of their board meetings and annual general meetings, and file them with the ROC. These minutes provide a record of the company's decision-making and compliance with relevant laws. Preparation and filing of income tax return of company. Companies need to prepare and file their income tax return with the Income Tax Department by the due date, which is generally the 31st of July of every year. Preparation and filing of tax audit. Companies whose turnover exceeds 1 crore rupees need to get their accounts audited by a chartered accountant and file a tax audit report with the Income Tax Department by the 30th of September of every year. Issue of share certificates for all shareholders. Companies need to issue share certificates to all their shareholders, which provide proof of ownership and are required for any future transactions involving shares. Filing of 07 mandatory registers. Companies need to maintain and file 7 mandatory registers with the ROC, including registers of members, directors, charges, and investments, among others. Filing of MBP-01 and DIR-8. Companies also need to prepare and file MBP-1 and DIR-8, which provide details of the interests and appointments of directors and key managerial personnel. Filing of Form INC-20A. Newly incorporated companies need to file Form INC-20A within 180 days of incorporation to obtain a certificate of commencement of business. Filing of Form DPT-3. Form DPT-3 is a return that needs to be filed by all companies that have accepted deposits, other than government companies and banking companies. It is a one-time return that must be filed with the Registrar of Companies, ROC, within 90 days from the date of receipt of money. It is important to note that non-filing or delayed filing attract penalties and fines for the company and its officers. Therefore, it is recommended that companies ensure timely and accurate filing of forms to avoid any non-compliance issues.